Alf, how was your weekend? All right, fine. You don't have to say anything. You can just sit there, do your thing. Friends, today we're going to talk about financial things, wrap that into sports cards, how it affects it. And this is going to be kind of one of those fun, kind of talk through the big picture economic type stuff. I'm going to throw out some opinions, but I know I've got some very astute financial folks that watch this video. And so I always like to get feedback from others as to what they think about what's going on in the world and how it can affect specifically inflation and the Federal Reserve and what they're doing and how that can affect all of us and sports cards, buying sports cards. Before I dive in, if you have never used PSA, $25 off your first submission with the SCD25 code. Don't forget to use it at the shipping and billing screen. $25 off, one card minimum. Hakes Auctions has a huge March auction that's out right now. All the goodness, sports cards, non-sports cards, graded comic books, graded action figures, all the things over there at Hakes Auction, so make sure to check it out. I will have a show coming out this week with President of Hakes Auctions, Alex Winter, is back to talk about this auction, so we're going to have a lot of fun. All right, I want to bring attention to a great YouTube channel that I follow. This guy is able to break down complicated financial topics and economic topics very easily for the average Joe like myself. Clear Value Tax on YouTube. And he does it very quickly, 5 to 10 minute videos, kind of breaking down current events and that sort of stuff. But one that he did is kind of more of an educational video here recently. And he made the video because he had made a different type of video related to interest rates and the Fed. And he saw in the comments a lot of people just didn't really understand. And so he wanted to kind of break that down a little bit better. And I think that's really important when we're looking at buying into sports cards, whether these are short-term flips or long-term holds for your PC, whatever it is. I think this information is really important. And at the end, I'm going to give kind of a prediction that he gave that I completely agree with, because I think it's really important for all of us that are buying into cards. So as we know, we're kind of playing a little bit of a game of chicken. The Federal Reserve is trying to hold interest rates. And why is that? Because of inflation still kind of lingering around. They want inflation to drop a little bit more, but it's not quite doing it. And so typically how this works is you raise interest rates and that lowers inflation. A big reason for that is when interest rates rise, all of a sudden, now in your savings account at the bank, you're getting a return. I'm sure you probably noticed this over the last couple of years. You have been able to get in a money market account just through your bank, you're able to get 4 to 5% on your money, which is great considering there's very little risk compared to putting it into, traditional investments, even stocks and real estate and all that sort of a thing. 4 to 5% consistently, especially when you have big money. For the ultra wealthy, 4 to 5%, and they just sit there and gather 4 to 5% on their millions of dollars. That's a beautiful situation for folks that have a lot of money. And so that's how the Fed fights against inflation is they'll see, okay, inflation is rising, so we're going to go ahead and raise interest rates. And really what that means is a lot of the ultra wealthy or the upper middle class, whatever, will pull money onto the sidelines and just take that 4 to 5% and not have it out spending out into the ecosystem, because as more and more money is out there being spent in the ecosystem, it causes inflation. Everything gets more expensive. Everyone looking at eggs and looking at groceries and looking at gas and all these things. All of it is because money flowing out into the ecosystem. We've seen the same thing in assets. We've seen, Bitcoin and crypto. We've seen real estate rising. We've seen stocks on the rise. A big reason for that is you've had basically zero interest rates right after the financial crisis in 2008, all the way to about 2023. We're talking about 15 years of really low interest rates historically. And then, of course, over the last couple of years, they raised them aggressively. And now they've kind of pulled back a little bit here over the last 6 months or so. And so naturally what happened as interest rates are really low, you're not getting that money from your money market. You're not able, you put it in savings, you're getting 0.5% or something on your money. And so what do people do? They're looking for store of value. They're looking to invest something where they can beat inflation. They can get a better rate of return. And that's where we've seen asset prices go ballistic. And then, of course, all of this is magnified with all the money that was printed over the last few years of the pandemic. All of that goes out into the ecosystem. It's got to go somewhere. And so now we're in this kind of this weird place. The Fed is basically saying we don't want to lower rates too quickly. We want to see inflation come down a little bit. But here's the other problem with that. The U.S. in general has a huge deficit that they pay interest on that's tied to these interest rates. So the higher the interest rates, the more interest we're paying on our national debt, which is compounding another problem. So you can see how this is a problem all the way around. So it might just be that as we kind of move through life, that we have to get used to inflation being a little bit elevated. It might just be that inflation is going to be elevated more so than what they are comfortable with. And that's just going to have to be the way that it is because we can't keep interest rates high. The other piece, when interest rates are high or if they were to go higher, it affects unemployment. Typically what that means is unemployment goes up as interest rates go up. It puts pressure on business lending. It puts pressure on businesses. So you've got all these problems that happen with higher interest rates. But again, as Clear Value Tax explains, as they lower interest rates, it is inflationary. It causes more money to go back into the system because what's going to happen again? Well, the 4 to 5% that you're getting on your money market account, it's going to come down to whatever, 1% or something. And then people are like, oh my God, I'm getting 1% of my money. I can probably do better that elsewhere, whether that be in stocks, bonds, real estate, traditional investments, or a lot of us have fun diversifying into collectibles. And that's exactly what we have seen here over the last few years. And it has stayed that way. People diversifying into other things that they really enjoy, like sports cards, sports memorabilia, non-sports, and all that sort of goodness. I think really what this means, and again, this is my prediction, this is just my guess, but Clear Value Tax has predicted this. And I totally agree with them because the writing seems to be on the wall with it. And it's simply that we are going to have to get used to prices for things being higher than what we're used to seeing. He calls it hyperinflation, which he believes is going to go through the 2020s, whereas 2030, eventually, the stuff isn't sustainable. Eventually, there has to be some sort of a reckoning, which, of course, is probably going to be bad for the economy down the line. We don't know when this is going to happen. Who knows? Maybe this happens in 1 year. Maybe it happens in 5. Essentially, Clear Value Tax's advice into this is keeping in mind that you are going to have to gather assets. You're going to have to buy into assets to keep up, just to keep up with the hyperinflation. Of course, that means the dollar is weakening. Of course, that's going to mean that our dollar is worth less. And so it's going to mean that we're in kind of a race to gather great assets. Now, in sports cards, if we're looking at that, a lot of people say like sports cards are not great assets. 99% of them are not great assets. I would agree with you, but I think we can all agree that, there's 1, 2, 3%, 5% of cards that are printed that are important hobby cards. They've got scarcity, they've got rarity. And I also think this is a big reason why we've seen a flight to rarity, a flight to scarcity, is in part because of this notion that people are understanding that, hey, I want to have quality assets. I know that sports cards collectibles are not a traditional asset class. It's not exactly how it falls, but there is value in owning rare things. Weakening dollar over time, people are looking to, hey, I need to have things that are going to outpace this weakening, and it's quality assets. And again, nobody can see the future. Nobody knows what a quality asset in collectibles could be or would be. It's very speculative as we move through time, but there are proven cards. You look at, particular hobby cards, 52 Topps baseball, there are certain things that are investable in the collectible space. And I think that's really where I'm trying to focus more of my energy. Now, keep in mind, there's also room for lower end cards, fun cards, my Bobby Hebert Saints cards. These are cards that I'm not expecting to get some sort of return back for. But again, I am still in my 40s. I'm raising a family. I got responsibilities. And so trying my best to make smart buys. And so I thought this was really interesting. Check out his video. I'll put a link down below. His video is kind of a basic crash course, 7-8 minutes, just trying to understand monetary supply and how the flow of money affects not just sports cards, collectibles, but also the price of all things. It's a very complicated topic. There's tons of moving parts and variables, so nobody can really predict what's going to happen. But I still think it's very important to try to be educated on monetary stuff, trying to understand finances as best we can out here with this ever-changing environment. Friends, stay healthy, stay awesome, and I will talk to you again later.